Well, first of all, welcome to another meeting for the Georgia Self-Storage Association. I'm Ann Ballard, your president this year, and we're glad to see all of you here today. So give yourselves a hand, another record-breaking crowd. First, we would like to honor all the board members, past and present, who have served you as a hard-working group. So if the board members could please rise. Thank you. Yes, Wilson, you are a board member. And we thank them for their service. And next, we'd like to have all of our new members and first-timers please stand up. Let's have you quickly introduce yourselves since you're new members.
My name is Miguel. I'm with Wells Fargo SBA Finance.
Glad to have you here today, Miguel.
Thank you. I'm Brian Stoll. I'm with Wells Fargo SBA Finance. I'm here to watch over Miguel. Doesn't do anything out of the ordinary.
I'm Dean Bosman. I'm with William Knight and provide the property and liability coverage.
Just not with
Glad to have you here.
I'm not a member yet, but it's my first time attending here because I'm sure you thought it's good news with self-storage. And I went to the national convention last year and I thought it was awesome.
And tell us your name.
It is David Holmes. I'm here in the Atlanta area.
David, welcome to the wonderful world of self-storage. Glad to have you here today. And as far as I understand, I think we're up to now 232 members. That means we're 18 members away from my annual goal that by living and breathing, we're going to have 250 by the end of this year. So let's all give Richard Williams a little round of applause. He's responsible for a lot of our new members. Thank you, Richard. And next, don't forget our exciting event schedule for the regional meetings. We had a great time in Savannah last week. Stacy Gorman, where are you? I know you were, wasn't she in the house? Well, she may have stepped out, but she did a great job giving the Savannah crowd a rental rate survey. And don't forget her upcoming presentation for May here in Atlanta at this room of the Georgia self-storage rent program and schedule. She's just done a great job in that survey, and we thank everybody at Marcus and Millichap for supporting that. So don't forget to go ahead and sign up now for May because it'll be another packed house. The regional meetings, we still have how many left now? 6 left. And so I understand Gabe.
Go for it. Introduce yourself. Okay. Tell us who you are and what you do.
Thank you, Mark. My name is John Rapole. I am with U.S. Trust, the private bank of Bank of America. I've been a member of GSSA for about a year and a half. We dove right in. It's a great industry, a great business opportunity, and great folks. So I'm glad to be here to talk about what we do.
Can I share your mic for him? John Rapole has over 25 years of experience in wealth management, serving high net worth families and institutional clients. He's presently at U.S. Trust, where he leads a team of highly skilled professionals who offer investment counseling, tax, estate, wealth transfer, and multi-generational planning to clients. John joined the U.S. Trust in 2008. And prior to that, John worked with Wachovia Wealth Management, Jackson Securities, and Merrill Lynch, respectively. At each company, he served high net worth clients and their families and earned his BA in finance and a BSM in economics from Tulane University. He is Series 7, 63, and 66 registered with the New York Stock Exchange and NASDAQ. He's very involved in the nonprofit community here in Atlanta and has served on numerous boards of directors and currently serves on the board of directors for Zoo Atlanta. John Rapole.
Okay, that's better. Who was that guy?
Yeah, I don't know what all them 67s and 44 trade abilities are.
I'm Clay Holloway.
Ian, what'd you do?
I tried to.
John, yeah. There you go.
Yeah.
I'm Clay Holloway with Harvard Capital, which is my concern. I'm trying to be a reformed banker, but I've been in town for about 40 years, ending with Wells and going all back to all their predecessors to First National Bank of Atlanta. And what we do at Harvard Capital is work with small, mid-sized operating companies, business owners that are in need of capital, which could be bank borrowings, mezzanine sub-debt, working capital, working through the traditional lending institutions, as well as working with alternative funding sources or boutique funding sources. Got involved with GASSA about a year and a half ago. It's just a great, not only a great organization, but I got to know a lot about the industry through my neighbor of about 9 years, Glenn McCotra, who is, is he still on the board?
Past president.
Past president. And just a fascinating industry. And literally went through with him through the, as you pointed out, the 7, 8, and 9 time frame, and now it's one of the kind of preferred asset classes that banks are beginning to look at. So I'm glad to be here.
So Clay Holloway is a graduate of the University of Wisconsin-Madison, where he earned his Bachelor of Science degree in economics. Clay has been in the Atlanta commercial banking market since 1974. He began his career with First National Bank of Atlanta, which was later acquired by Wachovia, First Union, and Wells Fargo banks. In the 1990s and in between bank acquisitions, Clay ran several SBA Southeastern regional offices for 2 non-bank lenders. In 1995, he founded Harvard Capital Corporation as a financial intermediary and advisory for small to mid-sized companies seeking capital. Harvard Capital's funding includes senior debt, mezzanine financing, and equity capital. Clients are best served who have funding needs from $500,000 to $10 million. Companies seeking funds for business acquisitions, business expansions, debt restructure, partner buyouts, or working capital are typical clients at Harvard Capital Corporation. Clay Holloway proudly notes that he spent 30 years in the U.S. Army as a helicopter pilot. His active duty service included flying Cobra gunships in Vietnam and serving 24 years as a medevac pilot flying out of Dobbins Air Force Base. Excellent.
My name is John Pell. I'm with the SBA area of State Bank. We have a very aggressive and big appetite for SBA loans. And without boring you with all my history and track record, I only ask you to ask a couple of our customers who have been through the SBA process, who are sitting in this audience, how we do, because that, I think, speaks the best of our strategy and our focus. And I'll brag about our company, we're #1 SBA lender now for the last 7 months in Georgia, with about 37 transactions and about $35 million in funded loans.
I've got Jonathan's bio. Jonathan graduated from the University of North Carolina at Chapel Hill. He started his finance career at Citizen and Southern National Bank here in Atlanta in the management and training program. It included 2 years of formal credit training under Georgia State professors and CNS upper management, and he was followed by 8 years of asset-based finance experience, prospecting, underwriting, and closing deals in both Georgia and Florida. After 10 years in banking, he traded his coat and tie to be a CFO and general manager of one of his customers' business, an Atlanta-based plastics distributor, and he took the company to a private equity firm for a sale, and then he became independent in buying and selling single houses, commercial properties, as well as multifamily. After the recession, he returned to financing, where he became specifically focused on SBA finance, where he considers himself an advisor to small businesses and their owners. He's married for 26 years with 2 children, and he also believes in his passion and energy to help small business through the SBA financing model.
I got a big mouth. Can everybody hear me?
Yeah.
Good afternoon. I'm Gary Farmer. I own a company called Georgia Lone Star Commercial Funding. Georgia, because we're here, Lone Star is on Texas, so that's where the name came from. We specialize in all sorts of different funding, but one of the things we really work with is planning your loan strategy. And this is very important because you have to take a look at your long-term goals. The cheapest interest rate is not necessarily the best deal. And as we talk along here, hopefully I'll have a chance to talk about some of the situations. Generally, I finance just about anything we can, mezzanine, CMBS, bank contacts. But I think the most important thing I help you do is plan your loan. And that's what you need to do, is plan it for the future. How you're not only getting into it, but how you're going to get out of it, when you're going to get out of it, and under what. Thank you.
All right, it is my distinct pleasure to be able to give you a little background on Gary Farmer. Gary started his career in the telecommunications industry and fortunately found religion back in 2007 when he came and joined into the self-storage business from a financing perspective. So Gary began successfully financing commercial real estate acquisitions, construction projects, and refinancing for commercial properties, including self-storage. Gary finds that being an independent commercial loan broker has several distinct advantages to offer. As part of his business practices, he discusses long-term planning along with the specific loan strategy. Gary also shared with me that he has a secret passion for sports cars, perhaps Maseratis and Ferraris in specific, and so he has guaranteed everybody who gets a loan gets a new Ferrari.
Well, I thought Texans were good at BS. I guess
As you can see, we probably got the, am I on? Yeah, maybe. As you can see, we probably got one of the most diverse, not working, is it?
Yes, it is.
Okay. Lending crowds are representatives that we've ever had here at the association, from SBA to a source, a guy that goes out and gets the sources, to someone that has their own in-house money that they lend. So you've got not had a better opportunity to ask the questions that you want to ask the panelists. I'm going to ask the first one is, and each of you can kind of go down and address this, but what kind of loans do you provide for the self-storage industry typically, and what should we expect?
I guess I got the microphone. Construction loans, normal financing, 25-year financing with banks, CMBS loans, SBA loans. What can you expect? I think, it's just my own personal opinion now, my crystal ball doesn't work all that well, but I can't see the interest rates jumping much in the next 18 months because of the election coming up. Nobody's going to want to stir up the pot. But after that, I think they have to go up. CMBS loans, last month there was a large sell-off of bonds in the CMBS market. Hopefully there'll be one this month, and that'll bring the rates back down. However, under the Dodd-Frank Act, the lender now has to have 5 to 10% of the loan himself. They think that's going to, speculation is going to push 20, 30 basis points on the cost of the loan. But I think we're in good shape with self-storage. I think we got at least another couple of years where the banks are going to be jumping over themselves to get your business.
That's a pretty good segue here. The beauty of the SBA financing.
Use the microphone.
Mr. Bobby Cannon and David Thibodeau can attest to this, and they're probably sitting in the audience, is on a self-storage facility, and it can be a Class C facility that's been around a little while. We can go 25 years on the amortization and 25 years on the note. So everyone just digest that for a minute. And guess what? No financial covenants. None. So I've got a couple colleagues that are here, one of them sitting in the back who does commercial and C&I lending, and every time I tell him that, he turns a whiter shade of pale because he still doesn't believe me, even though we work at the same company. So the SBA guarantee allows us to do things that the bank typically can't do, which is why the SBA, which is the Small Business Administration, has been around for decades, and God willing will get funded again next October and will be around for much longer, because it does create jobs and allows us as a conservative lending institution, although we're a public bank, small but public, to do things that we can't otherwise ordinarily do, and provide an income, or excuse me, a cash flow savings to that borrower who owns the self-storage facility and put it in their pocket, and which makes our asset better.
Segueing from what these two guys have said.
What's his face?
Yeah, I know. For what we do is, it goes back first to your, what's your ultimate purpose, your planning? Is this a short, intermediate term play? If you're buying a facility, you want to build one, you want to build it up and stabilize it and sell it, or is this a long-term hold? This will, step one kind of determines what kind of loan you might consider. Picking up what Jonathan's, the beauty of an SBA loan, it's like a home mortgage, one-time close. As long as you're paying, they say as long as you pay, you stay. The thing to consider is it's always the bank's loan, and every bank will look at your financing request a little differently. There are institutions out there that don't like SBA, or don't like self-storage, or yeah, and but you have to remember it's the bank's loan. The bank looks to the SBA really as kind of an insurance policy, because the driver of the government, the SBA, is for your benefit, and that's preservation of capital. And how do they do that? They require less capital equity going in versus a conventional loan. And they give the extended amortization, so you have a lower monthly payment versus a conventional loan. And it is said that there are no financial covenants where a conventional loan may have financial covenants. So, goes back to the beginning, what's your purpose with this property? If it's short, intermediate term, you might want to consider the conventional. If it's a longer term play, SBA is a really valid financing program to consider. And the good news, all the banks that are active in the SBA program, everybody in the back of their head has these old cobwebs and horror stories. Today, these are all, it's specialized lending, and they all have, their lenders know the program, they have a good closing process, and it's a paperwork intensive process, but that's because the banks are so regulated, and they can work you through that process.
I am, as Mark said and Ann said earlier, I'm with the private bank of Bank of America. So we focus on high net worth, wealthy families, and we define that as $3 million in liquidity or marketable securities, cash, marketable securities, whatever. And where we really compete is we are the first ones to take the umbrella away. As soon as the clouds come out, we're coming in very, very conservative. But because we have a big capital base, our rates are very competitive. So we are financing a new construction storage facility at below 2.5% all in, and once at CO it'll convert to a 20-year AM at the same rate. So at about 70% loan to value. So where we really compete is for liquid clients who are looking for the lowest rate possible. We're full recourse. We have a CMBS desk, but that comes in and out of favor, and all of these guys do that and do a better job than we do. So we're looking for once we have a relationship, we're pretty good to work with. But really, where we add value is providing a relatively low rate, a low cost of funds, and of course full recourse. And we do construction or refinancing stabilized properties.
Any questions from the field out there?